Well, hi, everybody. This is Tim Bost with FinancialCyclesWeekly.com. Thanks so much for joining me today. We're looking at how you can forecast and time the next stock market trading top. That's our concern here today because we've been getting lots of questions from our members here at FinancialCyclesWeekly.com, from our viewers and listeners online, and our readers all over the world. The big question, of course, is when will this long bull market actually end? We've been in a bull market now for much longer than most of the pundits and forecasters have predicted. It just keeps on keeping on, and we don't know when it's going to end. So the question is exactly how long will it last? And the second question that goes along with that, of course, is what happens when it does end? Will we see kind of a gradual decline and a soft landing of sorts as the bull market comes to its conclusion, or will we in fact see a major market crash, one of those gut-wrenching experiences that destroys individual portfolios and makes history along the way? So these are the big questions, and the fact is that I want you to have the answers to those questions. In fact, our aim here at FinancialCyclesWeekly.com is to make sure that you get the answers you need to be successful in the markets using the astro-trading advantage. And that's what we're all about here. So in order to provide the answers to those questions, what we've been doing recently is taking a look at the markets in a very, very close way here. And as we have done so, we have worked up recently a forecast that we want to call your attention to here because it has proven to be very accurate, and it's an example of how we can go about predicting ahead of time what a trading top may look like in the markets. Now, this work began here on Wednesday. This was Wednesday, the 18th of June in 2014, and we were doing some market analysis that day. The S&P was trading around 1945 or thereabouts when we did this analysis, and we forecast based on our planetary timing techniques and our understanding of harmonics in the markets that the S&P would hit resistance at 1964 on the upside. Of course, this would mean about a 20-point move in the S&P, not without possibility certainly at that point. And we also said that above that zone, if we did break past the 1964 mark with a close above that point, then we'd be looking for resistance at the 2009 level. Now, this happened as we put together this forecast and did this work early in the trading day. This happened prior to the big run-up in prices that we saw at the end of that trading day on Wednesday, the 18th of June. In the S&P. Then the following day was when we went on the air with Michael Yorba for his Traders Network radio show, and during that interview we talked about the price levels we were looking at for the S&P 500. I mentioned on the program, of course, that we were looking for resistance at the 1964 level. I said that I did see the possibility before mid-July of the S&P moving up to the above the 2000 mark. If so, and if we got consecutive closes above 1964, then we would be looking for resistance at 2009. That was what we described during that interview. And of course, as the market closed that day, as we were closing out the interview, once again we had a rally in the market, moving prices up to about 1959 that day. Then on Friday the 20th, we had a fairly congested trading day. But what was interesting here is that during the course of the day, we went up to, I think, 1963.91. We did not break this dotted line here, which was the 1964 level that I've added to this trading chart. That was the price point that we said we'd find resistance, and certainly that held very, very strongly on Friday, June 20th, 2014. So we moved into the weekend then with this forecast very much active, and that 1964 level for prices, for price resistance, very much intact. We began the next trading week here on the following Monday with prices kind of kissing that level once again here on the 23rd of June on Monday. And then what happened was prices fell back sharply from that point, did not recover that ground during the course of the trading day. It looked like, again, very strong confirmation that this 1964 price level was going to hold. Now, we were forecasting the possibility of some bullish action on Tuesday, the 24th of June. And that proved to be the case. In fact, we traded intraday above the 1964 price level. These, by the way, are 30-minute price bars for the S&P 500, so we can get a quick overview of a number of trading days using these price bars. And as you can see here, as the price shot up shortly after the opening with the market that day, it moved above that 1964 mark. It went up to 1966, up to 1968, and then intraday there was simply not the strength to hold it above that 1964 mark. The atmosphere was way too rarefied. We saw a sell-off get underway almost immediately as soon as the price had explored that level, and the price continued to fall rather drastically. By the end of the trading day, we got a substantially lower close. Again, a very, very big confirmation that this price point was an effective level for us to be watching for resistance in the S&P. Then on Wednesday, the 25th of June, we once again had some bullish action intraday, but again the price closed well below that 1964 range, and in fact this resistance zone has not been touched since. As you can see here, we had again a very big drop in the S&P as we began the trading day on Thursday the 26th of June, and then we've just closed here on Friday the 27th. Again with a surge upward, we closed at 1960 and change, still 3 points or so off of the 1964 resistance level that we've been looking at since the middle of last week. So this timing technique has worked very, very well for us here in identifying a potential resistance zone in the markets, and it is in fact the resistance zones that make the difference in establishing trading tops. Now, when we can apply the accurate market timing, what this means for you is that you can get bigger profits from your trading experience. And that's what we're all about here at FinancialCyclesWeekly.com. We want to answer your questions, make sure you get what you need to succeed in the markets. And that's why we've put together a brand new report on how to time the next market trading top. I think you're going to like this one a lot because it's got a great deal of information that you can put to work right away yourself, since it's available as an instant download. In it you'll find information about historical market cycles, harmonic timing techniques that we use here at FinancialCyclesWeekly.com. We talk about W.D. Gann analysis and the tools and techniques that he used to so accurately name some of the trading tops in the markets in his day. Planetary market timing is, of course, a part of what we do here. We'll be looking at major trend indicators in the report, as well as Fibonacci numbers and Elliott wave patterns. We have a list of specific forecast dates that you'll need to keep an eye on for potential trading tops. Of course, this is all about benefiting from the astro-trading advantage in your own trading, and there's a lot more here as well. So take a minute right now to explore this. You'll find it at http://vibrationcode.com/time-top. We're timing the top in the market here, so go to vibrationcode.com/time time top. And you'll get complete information there on this brand new publication. Hope you take a moment to take a look at it because I think you'll find this one very, very rewarding indeed. This is Tim Bost with FinancialCyclesWeekly.com. Thanks so much for taking time to watch this video.